Hey traders, welcome to my channel. Today we're going to break down one of the most powerful concepts in trading, and that's the fair value gap. If you're serious about aligning yourself with the big players in the market, then this is something that you need to know about. So let's jump right in. Let's talk about the market movers. There's two different types of market participants. And it's important to understand that it's not just the retail traders like you and I who are truly moving price. The real market movers are the big institutions, the banks, the hedge funds, and these other major financial entities. They are the ones that are buying and selling millions of shares at a time. And that's the kind of volume that is really driving all of the price movement. So as retail traders, our goal isn't to fight these big players. We're not against them and they're not necessarily against us. We need to follow them. And our success is really hinged on our ability to identify where these institutions are placing their trades so that we can align ourselves with those moves. And how do we do that? Well, that answer lies within liquidity. So let's talk about liquidity. So the liquidity is where the action happens in the market. These are pools of buy and sell orders that are just waiting to be filled. So the market consists of pockets of limit orders. And when these big players like banks, when they want to place these huge orders, they don't just execute them at any price. They look for areas of liquidity. And these are the spots where there's enough volume to fill their large orders without any, dramatic effect in price. So here's where the fair value gaps come into place. So these fair value gaps, they often appear around areas of liquidity, and they can serve as clues for us as retail traders because they're showing us where the institutions are more likely to make their moves. So why does this matter to us? Well, let's think of it this way. We need to follow the money. And I say that all the time. We need to follow the money. And by understanding where the liquidity is, we can position our trades to buy when the big institutions are buying, and we can sell when they're selling. We don't want to guess. We need to really align ourselves with the smart money. We also need to have the edge. We need to gain an edge. And by us knowing where the liquidity is and where the liquidity pools are, that's going to give us an edge over most retail traders. Okay. So most of these retail traders probably don't understand or know this concept. And by us knowing this, it allows us to make more informed decisions rather than just reacting to, all the more market noise. So let's talk about the fair value gap, right? That's the core concept of today's video. So what is the fair value gap exactly? A fair value gap essentially occurs when there's an imbalance in the market. It's a gap between buy and sell volume. And these gaps are typically happening where there's strong momentum in a specific direction. And the price moves so fast or so quickly that not all of the orders in that zone get filled. Okay. And these fair value gaps will appear when there's a 3 candlestick pattern. So let's talk about that pattern. So the first candlestick that's what creates the initial price movement. Okay. And then the second candlestick is the continuation in that same direction. And that's what creates the gap between the high and the low of the previous candle. And then the third candlestick either starts to fill that gap or it continues with the imbalance. Now, on my chart, I have 3 different fair value gaps, and we'll get into that in just a moment on how it's formed exactly. So it's important for us to understand and know where these areas are, because this is essentially where the liquidity is. Okay, these gaps will tend to act as magnets for price, so that price will eventually return to these areas to fill these gaps. Now, why do we want to trade them? Why is it so important for us to focus on trading fair value gaps? Well, they provide insight into where these big players, where these institutions may have left, unfinished business, essentially. Okay. So since these fair value gaps indicate areas where there wasn't enough liquidity, it's very common for price to revisit these zones and fill that gap. There's three, reasons why it's important for us as retail traders to understand where these fair value gaps are. One, it's these act as high probability setups. So when price revisits these fair value gaps, price will often react off of these zones. And they create high probability trade setups where you can catch the next move. Also, these are targeting liquidity. Remember, the key to the market is liquidity. We need to know where the liquidity is, okay? And these fair value gaps will give us a clue about where the institutional orders may be resting. And they're just waiting to be filled. So we need to know where these areas are. The other thing that makes these so important, these areas so important, is that the trading around fair value gaps give us the ability to enter the market at a very precise level. And it reduces our risk, and it's improving our potential reward when we take these sort of trades. Now, let's get into the chart now, and let's look at how these fair value gaps are traded. Now on my chart, I have three different fair value gaps. I have two bearish fair value gaps. I have a bearish fair value gap here. I have a bearish fair value gap here. And then I have a bullish fair value gap here. Now, the way that we can easily identify if they are a bullish or a bearish fair value gap is pretty simple. We can see that this first or top fair value gap was created because there's a move down. So there's three candlesticks that create that fair value gap. The same applies to the second one here. This is a downward move, and this was created by three candlesticks. Now this last or bottom fair value gap was created by a move up. And we can easily identify if it's a bullish or bearish fair value gap just by the color itself as well. So these two top are bearish fair value gaps. The second one isn't quite, it's in the process of being, it's created, but we can't really tell because there's two sides of a fair value gap. There's the essentially like your bullish side and bearish side. But the overall color of the fair value gap is one particular color. It's either, red or green, but we can't tell by this fair value gap because it's not large enough to be able to determine the color of it. This third one here is green, so that implies that it's a bullish fair value gap. Okay, so now let's talk about how these are created. Again, it's a three candlestick pattern. So the first candlestick starts the bearish fair value gap. And the way it's created is by looking at the bottom wick of this first candle creates the top of the bearish fair value gap. And then the second candle is their long candle. And then the third candlestick, the top of the wick creates the bottom of the bearish fair value gap. So I'll go through it one more time. So the first candlestick, we have the bottom of the wick, which is the start of the top of the bearish fair value gap. Our second long candlestick, and then our third candlestick, the top wick of that candlestick creates or finishes the bottom of that bearish fair value gap. The opposite just applies for the bullish fair value gaps. Okay, you have the top part of the first candlestick, the top of the wick, that is the bottom, the start of the bottom of the fair value gap, your large move up, and then your third candlestick, the bottom of the wick is the top of the bullish fair value gap. So we want to look for price to eventually return to these gaps because these present opportunities for trades. And this is where us as retail traders can really, really capitalize. Okay. By entering these trades, give us high probability setups. Now, I'm not going to get into how to trade these setups. We'll get into that in later videos, but we're just explaining the fair value gap and why they are important. So there you have it. That's the basics of the fair value gap and why they're so important for trading. By learning to identify these gaps, you're not just guessing, you're following the smart money and you're putting yourself in a position to be a smarter, more profitable trader. So if you found this video useful and helpful, please be sure to subscribe. I just started this YouTube channel. I'm going to be providing plenty of content. If you have any questions about the fair value gap or anything else, please feel free to drop a comment below. And until next time, trade smart and stay disciplined.